Okay, in today's episode, we're discussing the future of decentralized finance. Now, we're seeing globally one of the ramifications of this kind of COVID government response has been an increased level of money printing now. And globally, I mean, you're even seeing it in Africa, where people are having such devaluation of their government fiat currency that in many instances they are moving towards decentralized digital currencies. And today, to discuss this, we are speaking to Bryce Paul. Now, Bryce is on a mission to basically help wake people up, and he's got a digital currency summit that is coming up right there down below. It's free to check out the Digital Currency Summit in the link right there down below. You'll see it pinned to the comments. Make sure you hit the like button on this side right over there, and it's good to see you.
All right. Yeah, I'm excited, man. This is going to be a ton of fun. I'm excited to hook up your guys, the audience, with the free tickets to the Digital Currency Summit. It's going to be a good one.
Okay, so let's start with right now. It's been interesting to watch when you look at Bitcoin. And I had Frank Holmes on recently, who's involved in Hive and in Ethereum. And he says that one of the things that you can't ignore is that big money is starting to get involved. It's a different kind of buyer. What is your thoughts on that and kind of what's happened with the overall cryptocurrency market, which of course is kind of popularized by the Bitcoin movement and some big players getting involved in it?
Yeah, it's a great place to start. And there's been a ton of shift from 2017 market structure and the institutional players that were in 2017 compared to now. And so, I mean, most recently you've seen, and you had Michael Saylor on your show recently as well. You had, and that really kicked off this bull run. Was MicroStrategy announcing that they were going to convert about half of their balance sheet into Bitcoin. They were a publicly traded company, and they kind of laid the roadmap for converting a publicly traded company's treasury into Bitcoin. And when people started to kind of see that, Bitcoin was being unleashed in the institutional markets, people really got excited. And so from there, we actually also saw Tesla in February of this year announced that they are as well converting 8% of their balance sheet into Bitcoin. So there's this whole trend, right? But beyond companies converting portions of their balance sheet into Bitcoin, particularly, what we're also seeing is a influx of banks, basically like Morgan Stanley and JP Morgan, announcing that they're going to be allowing their clients exposure to crypto assets. So this was never before possible. And the fact that now everything's being opened up, the floodgates are being opened up for institutional money, really there's never been a better time to kind of ride that wave. And the question that a lot of people ask me was like, well, why, right? Like, why are institutions starting to get in right now? Why is Stone Ridge, which is a massive multi-billion mutual fund, multi-billion dollar mutual fund, why are they allowing their clients, to invest in crypto now? Well, the answer is it's a little nuanced, but there's a few reasons, and primarily it has to do with like you mentioned in the intro, with the extraordinary inflationary period that we're kind of going through, where money printing, right, 25% of the current float, the current money supply was printed in 2020 to stave off of a depression, essentially. So you had a vast increase in the float of current money supply globally, right? Not just America. And so what that does was, when you increase the supply of a dollar, right, it actually decreases the purchasing power for all those dollars. And I'm probably preaching to the choir. That's probably something you guys understand. But also what they're doing in tandem with this sort of quantitative easing is keeping interest rates artificially and extremely low, near zero. In fact, in some areas, it's negative interest rates. So what's a negative interest rate? That means I'm giving the bank money, I'm depositing it, and then I give them $100, and at the end of the period, I only get back $99, right? That's like a negative 1% interest rate. So I'm paying the bank to store my money for them. Whereas in the old regime, pre-COVID, pre all this negative interest rate stuff, you deposit your money in a bank and you get interest in return for doing that. So interest is now not really feasible to capture here just by holding on to the dollar. So the demand for the dollar starts to decline. And you could also see the demand for the dollar decline in the boost in asset prices. So when you see Amazon above all-time highs and Apple above all-time highs and all sorts of different indexes, right? Everything's above their all-time highs and trending higher, yet there's something curious going on, right? Their earnings are lower than they were. COVID really affected their supply chains. They're not producing as much revenue. There's all these fundamental aspects of their business that are lower, yet their prices are higher. So there's this disconnect and people are having a hard time rationalizing what's going on. It's not that the businesses are fundamentally getting any more valuable, right? It's that money, cash, the medium of exchange, the denominator of value is becoming increasingly devalued, right? And so the other thing at a high level of what's going on is that governments are in a race to devalue their currencies relative to one another, right? Because they're not backed by gold. They're just, Bretton Woods, right? There's a free float for all of these currencies that are just pegged against one another. And what you actually have is, like, for instance, China and America trying to keep their interest rates as low as possible in order to devalue their debts that they owe one another. So there is I'll sum it up here. There's a huge war going on with taxpayers' monies. And at the end of the day, you guys don't necessarily get a say in what's going on, right? And that's why I'm a really big fan of Bitcoin and alternative cryptocurrencies that we could start to talk about in a little bit. But these are community currencies. These are governed by the holders of the currencies. There's no arbitrary body like, the Federal Reserve or anybody to kind of come tell you, what an interest rate is going to be. It's a pure free market economy. And there's a ton of flexibility in this, and especially with the decentralized finance movement and basically having a fixed supply asset like Bitcoin or like some of these other cryptocurrencies that have a set inflation schedule. So you're never going to be able to get diluted, right? Like when a government prints, 25% of the money supply in 1 year, and it's not offset by higher wages, you have a really big freaking problem. And what you need to do as, somebody who's listening, who's just like maybe thinking about like, wow, like I've heard about Bitcoin, didn't really know what it was. What it is, it's a savings technology. And what crypto is becoming, and we'll talk about in a sec, is actually a savings technology. And that's the main difference than it was in 2017 and 2016 and the previous bubbles, was that they were pure speculation in a sense, and there was no fixed rate, or there were no interest payments that you could make on Bitcoin by like basically owning Bitcoin, lending it out, and getting a 6% rate on it. That was never a thing before. Now it is, and you could also earn up to like 20% on US dollar stablecoins. We'll talk about that, but I think maybe at a high level, I think that's why crypto markets are so hot right now, and why institutions are really getting in.
So very well said. And those premises that you discussed from a macro factor, those have led me to gold. Those have led me to silver, commodities, all types of energy commodities, which, perform historically very, very well. And when the dollar's going on trending downwards. Yeah. And so these are all very attractive situations to me. And these same kind of factors have brought a lot of people to cryptocurrencies. Now, you've been obviously someone who's been involved in this industry for a very long time. You were very early adopter, right? I first got interested in Bitcoin around like $8,000. But when I look at these commodities, then I say, give me the reason, Bryce, that it is important to be looking at cryptocurrencies and digital currencies, right? You have your digital currency summit where you kind of go through and break down everything that's happening. The link's right there down below. It's free for anyone that wants to check it out. It's in the description and pinned to the comments right there down below. But basically, tell me why crypto, why digital currencies, why is it important right now?
Yeah, there's a lot of different ways to kind of address that question, but from a purely investment standpoint, then we could kind of talk about some more philosophical reasons. But from a purely investment standpoint, I mean, I think Paul Tudor Jones actually said it the best. He's one of the most prolific hedge fund managers. He's one of my idols. And in April, he put out a market outlook kind of in the wake of that, March 12th, March 13th crash where everything, corrected and, of 2020, everything corrected 40, 50% over the course of a couple of days. But what Paul Tudor Jones said is he said, I'm going very long Bitcoin. And the reason why is because in this, hyperinflationary environment that we're going into, you want to own the fastest horse, right? And so it's fine to diversify your portfolio. It's obviously encouraged. You don't want to go all in on one asset class. But the interesting thing about crypto is that it truly has been the best performing asset class of the last 12 years, right? Bitcoin has had an average return of 200% per year since inception. Since March 20th, it has risen faster than any other commodity or any gold or stock or anything like that. So it's got a historical precedence of just being very liquid, and so you could move in and out without having much trouble or much slippage. Of course, it's volatile, but it's got higher Sharpe ratios, which mean higher risk-adjusted returns than many other asset classes. And so I think from an investment standpoint, having an asset like Bitcoin, which is totally non-correlated, meaning that the drivers of supply and demand in the Bitcoin market or in the crypto markets are not the same drivers of supply and demand that are in the equities world or that are in the emerging bond market world or anything like that. It moves in its own pattern. And so having that sort of diversification in a portfolio is really powerful. The second thing I'll say about why now, it's really, we are coming out of a really long extended bear market. I mean, after, prices just made this year in 2021, prices just started to make new all-time highs that they haven't taken out since literally 2017. And so the fact that we have so much short-term momentum in the market, driven by a lot of these macro factors of, all the quantitative easing and all the, money printing and the low interest rates, we have now an environment that's very conducive to risk on, right? People are no longer, wanting to just stay stable and save in the dollar. People want to search for yield. And so in those sorts of environments, you have really powerful tailwinds and really powerful trends that start to form. And, I think markets, are very, how do you say, they feed on themselves, right? Trends feed on themselves. And the more, that price, they're reflexive, as George Soros would say, that the more prices go up, the more attention that the media puts on them, the more that people look at them, the more that people buy them, and bubbles start to form. So are we kind of coming into another sort of, to me, it seems like the very early stages of something percolating, right? Some sort of bubbling forming, because everything's starting to align. And like you said, I've been in this industry for over 5 years now at this point. And it's a very rare sort of condition that is necessary, for a hurricane to form, right? You have to have a certain pressure and a certain temperature, and it's got to be in a certain area. And then you're going to get an immaculate storm. And in the same way, we have very similar conditions on the macro level, as well as on a technical level, with these assets of, where they are in their life cycle of, their product roadmaps. In 2017, these things were just pipe dreams, right? They were just a white paper, maybe a rough outline of what the code is going to look like, and a super inflated market cap that's trading. And then, of course, that's why there was a huge correction. And so now in 2021, you have coins that have, much lower market caps. You have coins with not just a white paper, not just with a website, but with actual working decentralized products that you could go and you can use. So that's why I think now is such an interesting time.
And so basically, so when you're in the commodities market, right, you have people that are moving through all the assets of, let's say, the veins grade of a silver deposit in the ground, and they're trying to build a silver mine or a uranium mine or a gold mine, and they're moving through the company financials and all these things. And what you've been focused on, because you think we're in the very early stages of a movement into a massive upswing in adoption of cryptocurrencies, either for people doing it from a speculative play or people doing it from trying to escape their failing fiat currency play. And so you look at all that and you basically are going through and you're looking at this purely from how can you best position yourself financially. And that's kind of what you do in the Digital Currency Summit.
Yeah, that's a great question. So to kind of give some context, I probably should have did this earlier, but whatever. So I do a couple things. Like I run a podcast, which is one of the top cryptocurrency podcasts in the world with over 8 million downloads. It's called Crypto 101. I highly encourage everybody to check it out. It's totally free. And from there, really, my mission has always been to bring crypto to the mainstream. So when there was the announcements like PayPal announcing that they're supporting Bitcoin, Litecoin, Ethereum on their platform. And then you see instantly a direct correlation with prices. You could see that the market clearly wants higher prices. And so there's this, confluence of good news events followed by good price action, which means you're in a bull market. So that's good. Once you start to see good news events and bad price action, that means you're in a distribution phase and you're going to start to see, a weakening market structure. But I guess, you asked like my approach to the markets. And so I started with the podcast and built out this, large community of people just telling them like, hey, like, here's how we think about the markets and here's how, you could look at them. And then I started a crypto hedge fund because there was so much demand from people saying, hey, you got the knowledge and you got like, you've been in it, you know how to do it. I don't know anything about it. I'm a gold guy or I'm a stocks guy. Why don't we just give you our money and you figure out the best way to invest it? So I've been running a hedge fund now. It's about $20 million under management. It's called Tower 18 Capital. And we are specifically only focused on, let me turn my notifications off. We are solely focused on the crypto markets, right? So an investment strategy for a crypto hedge fund that's exposure is solely limited to crypto is far different from what a average citizen's portfolio and investment portfolio might look like. And so I think there's like a fine line between, having, all of your assets in crypto, right? Which I don't think is like a good thing. And when people say like, oh, invest in crypto and people say, oh, well, it's too expensive or I don't have enough money and all that kind of stuff. You could buy $10 worth of Bitcoin. You could buy $20 worth of a coin. And so I think just framing it with a thought of like, it's just a piece of your larger investment portfolio. So that's one thing to get out of the way. But I think back to the original question was like, certain companies have cash flow or, company equities. You model valuations based on cash flows and profits and sorts of stuff like that. With commodities, you can model valuations based off of, like you said, people going down to the silver mines, looking at production, all that sorts of stuff. So maybe how do you value cryptocurrencies? And really, at the end of the day, it's again, like I said, it's a free market, so it's very supply and demand driven. The trend following systems like your Elder Impulse system or your moving average, convergence, divergence, like all of those sorts of momentum and trend following strategies. That's how these markets trade. They are very, very reflexive. And so being able to spot like a long-term trend that's starting to reverse, like what we're seeing now is this long-term downtrend, which is slowly starting to reverse. And then this short-term momentum really starts to pick up. It's a really, really good recipe for higher prices. And did that answer the question fully?
Absolutely. So what is your expectations in 2021? You're at this phase right now where you even have people saying, well, now, all these altcoins are going to outperform Bitcoin and Bitcoin's, not going higher. What's your thoughts on your expectations, I guess, starting originally with Bitcoin and then how you see that impacting the rest of the market?
Yeah, that's a really, really good question. I think that's the question that everybody who's pretty deep into cryptos always asking. And that's what people get paid to guess, essentially. Those rotations in the market between Bitcoin and altcoin, and then essentially risk off into lending markets and into just cash. But I think at the end of the day, Bitcoin is number one. It's always been number one. It's got $1 trillion market cap. And the remainder of all the other, 8,000 cryptocurrencies combined have $1 trillion market cap. So you could kind of see that there's not going to be, in my opinion, there's not going to be a Bitcoin killer. It's already secured its place as number one. That being said, having secured its place as number one, its growth potential is limited relative to some of the smaller more up and coming. And what we saw recently was actually a tremendous breakdown in Bitcoin's market cap dominance, meaning that altcoins are actually in an environment that is conducive to higher prices in terms of Bitcoin, meaning altcoin strength and Bitcoin weakness. And so I think what we're going to see in 2021, I think 2021 is going to be actually historic. It'll probably, in my opinion, be one of the best years for crypto since 2014, honestly, or 2013. It's like, I think it's going to blow 2017 out. Like it's going to make it look like a little blip on the chart, which it's already starting to, but in that sort of environment, I think altcoins are going to perform far better. They're going to perform far better for a shorter amount of time. And typically what altcoins are, they're like beta on Bitcoin. So they track in tandem with the directionality of it, but they exaggerate it. That's what beta is. And so when Bitcoin's going up, altcoins are going to go up higher. When Bitcoin goes down, altcoins are going to go down harder and faster. So that's a really key thing for you guys to remember. But what we saw in the beginning of actually 2020 was a period of time that we were really bucking that bear market, right? It was a really strong bear market. And the start of 2020 was the very beginning when we could like start to buck it. And what we saw was Bitcoin rallying far harder and far faster than altcoins, and altcoins lagged. But now that new direction, that new trend is firmly up and to the right, altcoins are leading the pack. And I continue to expect that sort of price action in the future.
What do you see happening with the adoption of Bitcoin by larger and larger money? Obviously you mentioned Elon and Michael, but for, people like Max Kaiser, who I've followed for 10 years, with whatever he was discussing, whether it was the Federal Reserve or he was talking about Bitcoin or silver or some banking thing. And he believes that Bitcoin will go to $1 million. And, other people have spouted that around. And I've always felt like it's such a big number to just throw out. And to many people, it may even deter them. They might then go, oh, this is just, they're spouting nonsense to pump something. That's such a big number. But now that we've seen bigger money getting involved, it does make me reconsider at least like 6-figure type of numbers or 7-figure, because if, sovereign wealth funds just put 0.5% and, companies keep doing this, seems possible. Give me your thoughts on that.
Yeah, I've got a lot of thoughts on that. I think that $1 million price point for Bitcoin is not out of the question by any means. It just makes sense to me. These institutions that are clamoring over one another for exposure to a brand new asset class. Remember, this asset class, there hasn't been an invention of a new asset class since like the stock market, like in the 1700s, like with the Dutch India company. Like it was like the very first like stock, right? Then you had like in the 1950s and 60s, you had derivative contracts, but they're not a new asset class, like options and swaps. That's not a new asset class. That's a derivative of an old asset class. So what we have with cryptocurrencies is a brand new asset class. And people, institutional portfolio managers, have mandates to be diversified across asset classes. You have fixed income, you have equities, all sorts of different stuff. And so they are, this is a very key word, I want everybody to remember this, price insensitive. Price insensitive. They look at their portfolio. They say, hey, we're managing $60 billion. We want 1% exposure to cryptocurrency. So we need to allocate X, right? And so they're not thinking like, oh, we need to get in at $50,000 or it doesn't make sense for us, or we need to get in at $25,000 or it doesn't make sense to us. They just want the exposure, and they'll kind of get it at whatever time they meet the market, right? And so that's a really key thing to understand, is that as these institutions are getting in, sure, everybody has their own valuation of like, oh, well, here's a fair value. Here's where I'm going to put a bid in, and I'm going to try and negotiate and work this order. But at the end of the day, if your bid doesn't get hit, your bid doesn't get hit. And so what we saw actually with the Guggenheim Fund, the chief investment officer of the Guggenheim Fund, this was kind of, a great anecdote that lends to this scenario that I'm kind of discussing, is that CIO of Guggenheim Fund, massive multi-billion-dollar fund, announces on CNBC a $400,000 price target for Bitcoin. Of course, a lot of people look at Guggenheim as very prominent investors, smart guys, and on the back of that news, this guy spikes price immensely, and that was really one of the initial impulses to get us off of the 10K kind of flat mark up to 20K. And then he goes and he says, well, we did that analysis at 10K. We didn't even actually get in yet. And now it's a lot harder to rationalize this investment at 20K because price doubled. So we're getting, we're not getting as good of a deal. And then he goes on again after Bitcoin breaks 40K, the same guy. And he says, like, Bitcoin's, gotta crash. It's gotta crash. And you could tell he's talking his book. He's trying to say, Bitcoin's got to come down because shit, I've been telling everybody my secret sauce, my pie in the sky targets, and my bags aren't even filled yet. And so he said 20K is inevitable. And guess what? It goes to 60K. So I don't know what those guys are doing. But hopefully they're getting exposure little by little. But I think that at the end of the day, what's the total addressable market for Bitcoin, right? There's a lot of different ways to spin it. I think when you kind of look at like the total amount of, when you look at Bitcoin's market cap, it's $1 trillion market cap. But when you look at the total amount of gold, it's a $10 trillion market cap. So if you want to do a relative, like, comparative valuation there, you could say, okay, well, Bitcoin, has enough upside. If it's really going to take over gold, has, $9 trillion left of upside. But then you could start to think like, well, then there's $5 trillion of value that are locked in cars and collectibles, right? Other stores of values and antiques. There's $17 trillion worth of value that's stored in fine art. There's $20 trillion worth of value that's being stored in negative interest rate bonds, right? People that are giving the government money in return, getting less back at the end of it's just negative interest rates, makes no sense, right? It's like ridiculous. They're paying, they're lending money and getting less back. It blows my mind. But they have global stock markets at a $95 trillion valuation, right? Global stock markets are a store of value, right? You could see the comparisons that we're making with Bitcoin as the emerging store of value and crypto as the emerging store of value. And then you can see all the other stores of value, and you say, hey, wow, relative to all that, Bitcoin's really is still a small slice of the pie. And even if it doubles, right, to $2 trillion, then it's at like $110,000 a coin, and it's still, a fraction of what the rest of the stores of value in the world are. And it's it's harder, right? It has a lower stock to flow, meaning that it's got a really, really slow inflation rate, meaning that you could only print a finite amount of Bitcoin over time, relative to how much of it is above ground in terms of gold, right? Like gold has, gold above ground. That's the stock. And the flow, the other side of that ratio is how quickly that gold is mined. So in Bitcoin, we have the stock, which is the current float, which is like 18.5 or 19 million, right? That's the current stock. And then the flow, which is about like 900 Bitcoin a day that gets mined. And then you have a total amount of Bitcoin that could ever be mined is 21 million. And so you could start to see that, wow, there's only about 2 million Bitcoin left to be mined. And then all of the Bitcoin that will ever be mined in the world is done. And so you have a fully diluted supply, and you could have a really efficient price discovery mechanism there. The other thing I wanted to talk about beyond the stock market is that we have $243 trillion worth of value being stored in low yielding government bonds and corporate bonds. So beyond that, we also have real estate at 228 trillion, store of value. So of course you're not going to live inside of your Bitcoin. So real estate, we could maybe say, we can't live inside of our Bitcoin, but a lot of people have investment properties, right? That are, people store value in investment properties. And so in the same way, these large asset managers are saying, hey, we've got allocations to real estate and bonds and stocks and all this stuff. Oh, well, there's a new asset class. We need allocation here. Let's scoop it up at these prices, at this valuation, at $1 trillion, right? When everybody else down the line is going to be getting in at $5 trillion or maybe $10 trillion or whatever. Like all of these banks and all these financial advisors and these guys are slow to move. And so the people that are quick moving, like hedge funds and other investment funds, could notice this kind of like dislocation in valuations and say, hey, let's capitalize on this because we're early and people will need to allocate to this asset class. They will need to. And so let's allocate first.
So then you think that's what this first movement up to about 60,000 when you talked about some of these bigger types of hedge funds and some of these, big famous guys that have kind of moved in first, you think that was them saying pensions are going to come or big corporations are going to come and maybe they need some place like JP Morgan to offer it to their wealthy clients first. Let's beat them all to it. You think that's kind of what this first move has been before a next?
Yeah, I think that's it. That's a fair like assumption or a fair like kind of analysis of what I was saying. So I think that like what happened is like when prices went on fire. So like when Bitcoin hit $4,000 in of March of 2020, and then Paul Tudor Jones put out his big note, the options market at that time got really, 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 really hot. All throughout 2020, people were buying far out of the money call options, levering up. And then talking their own book. So I think that there was a ton of momentum. And then I think what happened is a lot of those early, really nimble, really fast moving hedge funds that got in, between 4,000 and like 12,000, there's a huge chunk of volume there. I think they actually probably started to offload around $50,000 and around $60,000. And that's why we haven't broken above it since February. We've just been in this contractionary environment where volatility is now at its lowest point as it has been in several months. Of course, low volatility begets high volatility begets low volatility, and it's cyclical like that. So we're in a very low volatility environment as of this time. But what I think is happening is that there's a, capital always rotates, right? It goes from weak hands to strong hands. It goes from speculators to, speculators and highly leveraged people into the hands of investors and, people that are not levered and, very deep pocketed. So there's, long story short, I think what we're seeing right now is a rotation from some of those derivative contracts that were kind of levered, just releasing that pressure. And who's coming to scoop it up? It's the larger institutions with deeper balance sheets that are able to kind of absorb that sell pressure.
So when I think about it more and more and more, it's, people will argue whether gold or Bitcoin. And to me, it's silly for a lot of reasons. One is, the market cap of gold and the movement of gold and the people that are always buying in mass are just, they're central banks. It's Russia, it's China, it's Iran, it's Poland, and then for Bitcoin, as I've been watching bigger adoption, one area I've thought was different is that people have been, like Michael Saylor converted his cash. And I think that as I'm watching it, what I'm interested to see is how many people with a lot of money, whether it's in their personal or it's in their actual business accounts, if they have, like Apple and all these companies have whatever 500 billion cash, and they convert 1% or 5% or 10%, and they kind of treat it like a digital cash on their balance sheet. They see what happens in a lot of instances to the value it can add to marketing and PR, and you get a movement of that. And I'm wondering, do you think that needs to occur for the next move up? You said that we're in a period of lowest volatility. So to get the next leg up in volatility as more more money moves into it, does it need to come from these types of big players moving a cash percentage into it or whatnot?
That's like a really, really good question. I think that, markets are, they're very impulsive, right? So it needs an impulse. What is that impulse going to be? Is it going to be, like you said, like it could be anything, and I'm not going to be the one to guess what it's going to be. It'll probably be a combination of government policy that is very loose fiscal and monetary policy. I think that'll be one. I think because that's going to be a driver. So, if the Fed comes out and they say, hey, we're going to keep interest rates low, we're going to lock this in, that's really good for risk on assets like Bitcoin. So that's going to be, it's going to contribute to the underlying bid, which pushes prices higher. Then you're going to have, companies that announce that they're in, like I saw the CEO of Shopify a couple of days ago. He puts out a call and he says, or a tweet, and he goes, hey, I'm looking for help understanding the Ethereum ecosystem, and what would you guys like to see Shopify like interact with Ethereum, and how do I learn about this? And so like when you see like, the CEO of one of the largest online retailers talking about cryptocurrencies, it's like, and then you look at the price charts and there's still bullish price action. That's really, really good. So I think it's going to be a combination of government policy, of tech companies. And then thirdly, like you had mentioned, and then we've been talking about that institutional adoption. So not just like the institutional adoption of PayPal's and Tesla's, but the institutional adoption of, the Guggenheims and the Morgan Stanleys of the world, pushing their clients' money into this asset class on behalf of them. And then fourthly is retail funds like ETFs. I think that the grayscale, kind of my big prediction, one of my big predictions for the year, is that the Grayscale Investment Trust Fund, which is now trading at a massive discount to its NAV, it's going to be converted to an ETF. So Grayscale, I think, in 2021 will be the first American Bitcoin ETF. Then I think they're going to have a roadmap to roll that sort of structure, that vehicle out for all of their different funds that they have for several different cryptocurrencies like Chainlink and Decentralized and Tezos and all these things. So I think we're going to see not just a Bitcoin ETF. I think we're going to start to see altcoin ETFs because the market wants it. It's so flippin' clear that the market has a desire and a demand for alternative investments. And so I think that sort of impetus or that catalyst will continue to drive, prices just through the roof.
Yeah, to me, it just seems so obvious that who knows where it'll be in 10 years, but it seems so obvious that there's about to be a very large move into it. And so when you get outside of the ideas of pulling your money in as a store of value to get out of fiat currency, then you just go, wow, it looks like a big adoption and a big flood of money. And that's what you're out to do, the same way that people I interview that are breaking down the best mining stocks, you're looking at this market as a whole and saying, how can I basically be involved in this wealth transfer in the biggest way possible? And that's kind of what we're going to be discussing on the Digital Currency Summit coming up. The link's right there down below for everyone to sign up for free. You'll see it in the description and you'll see it pinned to the comments right there down below. As we've seen crypto growing more and more and more, and we're trying to build, with I Love Prosperity channel, really just like the best ecosystem to wake as many of us up to what the government is doing to our freedoms and to our money. And it's obvious that we're moving into a digital currency phase. Some of those are going to be central bank digital currencies, right, and some of those are going to be sovereign ones. But it's a very interesting concept. And so for everyone listening that's enjoyed this, if you'd like us to turn a crypto corner segment of the I Love Prosperity channel either weekly or bi-weekly, and we do a crypto corner and we break down everything that's happening in the market from Bryce's perspective, give us a comment down below. You could just type in crypto corner right there down below, or yes, let us know if you've enjoyed this episode with Bryce, because I think it'd be a fun dynamic to have. What do you think about that, Bryce?
my mind is already racing because there's like a million more things I want to talk about. So, but then I just realized we've already been talking for like 45 minutes and we probably got to give the people a break. So their brains don't melt or anything. But yeah, I think that's cool. I mean, again, like the decentralized finance movement is the largest opportunity in the crypto markets, in my opinion, where you could actually start to utilize these cryptos. You could lend them out. You could get really fat interest rates on them. I'd love to tell people like how to get involved and stuff. So yeah, I hope everybody's enjoyed it. I hope people are interested. I'd love to be back. This was a really, really fun interview. You're really great at what you do.
Thanks, man. So the link for everyone is right there down below to the Digital Currency Summit. You will see
it's totally free. Actually, we want to hook you guys up. It's a totally free summit. Check it out. And we interview, hedge fund managers, founders of cryptocurrencies, developers. We've interviewed, all sorts of different people, founders of exchanges. So if you want to learn like every single different little aspect about the industry, then click that link.
Cool. So thank you for coming on. Make sure you hit the like button on the right side, the left side, right there down below. Give us your Bitcoin price prediction for 2021 in the comments right there down below. And I have to force Bryce to give us his Bitcoin price prediction for 2021. So let us know yours, Bryce.
Yeah, what's mine? It's a good question. I would say I think at some point throughout this year, Bitcoin will touch $200,000. Will it stay there? Will it touch it and go past it? I think $200,000 to me seems reasonable. And from here, at the time we're recording, it's about 55,000 or 60,000 bucks a coin. So, between a 3 and a 4x at some point would seem conservative.
So give us your comments right there down below. Check out the Digital Currency Summit in the description and pin to the comments right there down below. And let us know if you want to see more from our Crypto Corner segment.